Hello traders, today is the 4th of February 2013 and the time in London is 13:18 p.m. In London. In New York is 8:18 a.m. in New York. This video is about a flat correction. What is a flat correction? When do we have a flat correction? Where do we have a flat correction? What is a running a flat correction? We are looking at the stock, staple stock, Epic SPLS, Sierra Papa Lima Sierra, okay, Staples Incorporation, American stock. On the yearly chart, we have a flat correction here taking place, okay. Well, the two questions that we must ask all the time when we are trading is trading patterns, okay? When we are using Elliott wave patterns is when and where do we have the pattern? The flat correction takes place after a strong, okay, trend. Repeat, a flat correction usually takes place after a strong trend. We want the trend to be strong, okay? And after a strong trend, there is a high chance that we may see a flat correction, all right? Does not mean that when we see a strong trend, we will definitely have a flat correction. No, but very often, a flat correction will take place after a strong, okay, move. You can have a flat correction in a downtrend. After a strong downtrend, you may have a flat correction. After a strong uptrend, you may have also a flat correction. So when we are asking the question, when and where do we have a flat correction? We have a flat correction when we have a strong move, a strong trend, very important. 5 area wave, very strong, okay? That's after the 5 strong moves, that's when we are likely to see the flat correction. Where do we see the flat correction? The flat correction can be seen at the end of a strong, okay, up move. So at the top, that's why you usually see it at the top or at the bottom. The flat correction is usually seen, okay, so a trend line is broken, okay, and a corrective phase is starting, all right. This is very, very important to know when and where we can see the flat correction. So we can see for this staple stock, I was stressing on those points, okay, purposely because it's very important when and where the flat correction will appear. Very, very important. So we see that this stock went up from 1991 up to 1998. This is okay, stock that is listed on the Nasdaq 100. This is a tech stock. We know about the tech bubbles in 1999 up to 2000. See how the price went vertical here. Okay, 2 years vertical move. You can see here it was going diagonal and then it went vertical. We'll expect a correction. So as the price going down, the flat correction, after you will see first 5 waves, 5 bullish wave or 5 bearish wave. That's the first condition. And then we will see a move that will come down to correct, okay, if it was in the uptrend. So this is the first step of a flat correction. So we have A corrective move, and then this is the B corrective move, and this is the C corrective move. All right. We have a classic flat correction, we have a running flat correction, and we have the expanded flat correction. All right. In the classic flat correction, let me draw some lines here to show you because I'm trying to avoid that the video is too long. So this movement to the downside, this is the A corrective move of the flat correction. Okay, let me go quickly. So from here to here, that's the B corrective move, B for Bravo, corrective move for the flat correction. And this is the C corrective move for the flat correction. Very often, the the A and the C corrective move can be divided into 5 waves, and the B correction should be in 3 waves. So A can be divided into 5 subwaves, C can be divided into 5 subwaves. But sometimes you may see the A divided into 3 waves, but I don't want to say always, but very, very often the C should be in 5 waves. But the reality of the market can be messy sometimes, which I'm going to show you here, because what I'm trying to do is to simplify the Elliott wave, to acknowledge the theory, and also to acknowledge the reality of the market. Okay, so if you know, okay, in your head about Elliott wave, we want to use here our heart to analyze what is happening in real time sometime when the market is messy. All right. So we must have first 5 waves, and then one move down, that's the A corrective move, and another B, another retracement, because this is a double retracement, price went down. So first correction to the downside, another correction to the upside. This is a double retracement, because you see the trending path is from here to here. Now this is a correction taking place. So it corrected it first, and then went up again. Now it's correcting it again, all right? It's a flat correction. You see, in fact, it's a kind of, you see that it's stuck in it's stuck in this section here. That's why they say flat, you see. Okay, ups and down, okay? Okay, let's continue. I'm going to color my line now in blue. Pay attention carefully, but this is very important. That's why, okay, moment please. So, all I can say to traders, the criteria, we want to know when, very important, because if you don't know where the pattern will appear, and you see a flat correction out of nowhere, if you don't know where the flat correction should appear, you are likely to see something else and call it flat correction. So you want to know where and when the pattern should appear. Very important. So now the price went down in this session and then went up here and then come down. This is a running flat correction. In a running flat correction, we will see the A corrective move down, the B corrective move, which is this leg here. Let me in fact color it into different color. Will go and exceed the high, okay, of the trend. Did you get what I said? Okay, so we have, okay, the trend from this point to this point. This is the highest point of the 5 wave. This is, okay, a trend in phase, okay, the motive wave. Now this is a correction taking place here. This is about Elliott wave cycle, motive wave plus corrective phase. That's the Elliott wave cycle. So there was a 5 waves here. The trend has started here and ended here. Now we are in a corrective phase. In the case of the running, because there is a running flat correction, this is a running flat correction, we have the A corrective move down. Usually we bring the price into the zone of 50% and 61.8% Fibonacci retracement level. But it's not always the case. Nothing is certain. Nothing is always the same in this messy market. If somebody is saying to you this is exact measurement, they are fooling you. There are some, okay, what I call guidelines that we follow, but nothing remaining intact in the market, okay? So you want to be flexible and adapt to the market conditions, okay? So the A corrective move, we bring the price very often around 50 and 61.8. That's the theory. And the B corrective move, in the case of the running flat correction, the B will go and display a higher high. Normally, the correction shouldn't create a new, okay, higher high. But in the case of the running flat correction and the expanded flat correction, you will see that the price will display a higher high. Sometimes this can confuse traders. Traders will think that this is the 5th wave, but it's not the 5th wave. is the B corrective wave. Because traders counted another higher high, they think that this is okay, this B move is the fifth wave. It's not. Alright? It's not. It is there, okay? The B corrective wave. And from here to here, that's the A corrective wave. The B corrective wave usually will be divided into 3 waves, A, B, C. So because it's a correction, it can be divided in 5 waves. The A corrective move can be divided into 5 waves. The C corrective move can be divided into 5 waves too. But sometimes you will see the A corrective move be divided into 3. That's another thing we'll discuss another time. In the case of the running corrective, running flat correction, you may search on the internet for a running flat correction. You will see videos and articles about this that will help you to understand. So, in the case of the running flat correction, after the A corrective move, the B must exceed the high or must exceed the starting point of the A, because the A corrective has started here. From the top of the trend, the B corrective move must exceed the starting point of the A corrective move. That's one condition for the running flat correction. But the C corrective wave, in the case of the running flat correction, should not go below the end of the A corrective wave. Okay? Should I say it again? All right. So we must have first a trending first, a strong, because a flat correction will take place after a strong move. As you can see here, very strong. You see, it's a tall candle for a year. Boom. Okay. If you measure the range of this candle, it's almost the range of all these how many years? 7 years here. Okay. In 1 year, they achieved 7 years range almost. Very strong move. So there's a high chance you may see a flat correction. So 5 waves. A corrective move usually bring it to 50% and 61.8. Price goes up again. People thinking this is going to display double top. Okay, you see here, trader will think it's a double top going to be formed here. But the price will break the double top, create a new high. When we see that, the first thing that is coming to our mind is a running flat correction or an expanded flat correction. Now, let me say this before we continue. As we are here today, on the 4th of February 2013, the price here, that's all I can say. So I can say to you now, this looks to me like a running flat correction. If we violate this low here, there won't be anymore a running flat correction. We will have instead, okay, we will have instead an expanded flat correction, which means the price will go like this, which means it will go up a bit here and then come back down and take this low here, bringing it somewhere here. That will be 1, 2, 3, 4, 5. So it will take this low, and that will be, instead of a running flat correction, an expanded flat correction. I don't want to talk about it now. I want to talk about, okay, a flat correction and a running flat correction. All right? Otherwise, this video won't finish today, okay? So a flat correction will take place after a strong trend, either bearish or bullish trend. We know that. Next step. The flat correction is formed of ABC, corrective move. The A can be divided into 5 waves. Sometimes you will see in 3 waves. The B should be 3 waves. And the C should be 5 waves. Normally, should be always 5 waves, but just take it that way. That's the theory. Now, the B, in the case of the running flat correction, should exceed the starting point of the A corrective wave, okay? And the C corrective wave, in the case of a running flat correction, the end of the C corrective wave should not go below the end of the A corrective wave. This is the end of the A corrective wave. In the case of the running flat correction, the the end of the C corrective wave shouldn't go below this the end of the A corrective wave. That's what we have here. That's what I'm saying to you. We have a flat correction here taking place. At this point in time, that's all I can say. I don't know what the price will do next, whether if this is stable. If tomorrow they come up with some crazy news, okay, and they say that blah blah blah, and they were cooking the book. I'm not saying that they're doing that, or they did something stupid, or the business is not growing, or they are not making money. The price will come down. So this technical analysis will be invalid. We have to now go back to the expanded flat correction. The market is dynamic, changing all the time, and we want to keep our eyes on the price using the trading triangle, the market first, the sector before the individual financial instrument. The heart of the trading triangle is the leaders, the news, and the fundamental. The leaders, the news, and the fundamental can change the dynamics of the market instantly. All right, very important. So at this point in time today, I can say this is a running a flat correction. All right. Another method. This is outside area wave. Let me say this again. This is outside area wave. Another easy way to spot quickly a running flat correction or an expanded flat correction is to notice that very often you see the probability display A, B, C, D chart pattern. This point here, that's what I'm calling A. This point here, I'm calling it B. This point here, I'm calling it C. This point here, I'm calling it D. This is A, B, C, D chart pattern. When we see the A, B, C, D chart pattern, check whether the A corrective wave, okay, has been 5 away. Check whether the A, B, okay, the AB of the chart pattern, do not get confused. Do not get confused. The A, B chart pattern here, okay, talking about A, B, C, D chart pattern. Check whether the A to B has been divided into 5 waves. You can see that on a lower time frame. So you see A, B, C, D chart pattern on another time frame. Check whether the A to B has been divided into 5 waves, and check whether the C to D has been divided into 3 waves. Very often, when you see the A to B divided into 5 waves, but the C to D has been divided into 3 waves, okay, you are likely, okay, you may be, okay, looking at, okay, a flat correction. This is just a tips outside the area wave to detect quickly, okay, all right, a flat correction or a running flat correction or an expanded flat correction. A, B, C, D chart pattern. Do not get confused with A, B, C correction. Let's move on. All right. Okay. So this is just a tips quickly outside the area wave. So this is a running flat correction at this point in time. So suppose I want to buy, okay, with the TSTWSY008, looking for cycle to begin at this point in time. I will put a line there because I want to know where, okay, I should bail myself out. So I put a line there. So this is where I'm looking for a bullish cycle. In fact, there was a bullish cycle here for those who are using the TSTWSY008. So if you understand, okay, market pattern, price pattern, area wave pattern, you will know where to catch cycles and what is likely to take place. So there was a bullish trend. Now we have a running flat correction at this point in time. That's all I can say. I will expect a new cycle to start at this point in time, a price to continue to move up. The price will not move without a strong fundamental. If the margin management is useless, if the company is not making money, if nothing is going on for the company, if they are, okay, they are not handling the competition very well, there won't be any move to the upside. Very important. The same thing, you want to sell a stock, if the stock is dominating the competition, the global economy is very, very bullish, it will be very, very difficult, even if you see the best, beautiful bearish pattern, may not go down. If there is a value or the price is highly discounted compared to their book value, smart money will be buying because they know that the book value is okay, higher than the current market price. All right. So if we are trading, we want to use our mind and also our heart, which means you are trading, you are excited, you like it, you enjoy it, but you want to make it right. So which means give priority to the best signal and filter out useless signals. If it's not working, uh, I mean, if like now I put my pink line here, if it goes below it, and you can just close the trade, full stop. You know that why is it going back to this line? Why is it? Or you can just put two lines to highlight zone. It's because it's a quite big session. Highlight the zone, two lines, and say, okay, if he's come back into this zone, I'm coming out, or something like that. And use your tool, okay, around, okay, hot spot of the zone, around key levels. You may say to me, George, this subject of flat correction is too complicated to me. All right, fine. Let me remove all lines, and I will tell you what you can do. Draw line, draw line. So the price went here. Draw lines. See, that's it. The price. This is the starting point. The price changes direction here. This is a hot spot in the zone. So I'm joining this point and this point. You see, some traders make excellent decision here. While the price D below my trend line, okay, my blue trend line, and it D below it. You see, it went down first, okay, D below it, okay. Some traders were selling here. You can see the wick on top of this candle as the price was going near this trend line. During, at that time, some traders were challenging the price here because they know that, okay, it went below it. Now it's coming near this trend line. They were challenging it, selling it. Now, okay, let's draw some horizontal line. This one here, color in blue. So you say to me, George, I don't want to know anything but Elliott wave. Okay, pay attention to the price, the language of the price. You see here, the price went up from here to this level, okay? Let's measure that, okay? I'm going to measure here, okay? In fact, I will just go vertical like this, okay? And stop. I will stop on top of this candle here. So I'll say it ended here. So, okay? So, from here to here. Can you see it? Okay? That's the up move. Pay attention. Color in pink so you can see clearly on your chart. Look at that. Price went from here to here. That's the same distance, you see. The pink one. Price display a higher low. We will expect the price at least to achieve this, okay, move. If it failed to achieve this move, the length of this move from here to here, which it did before because some traders were buying here, if it failed, okay, to achieve the same move, we will know that they are not very excited about it, or maybe they are not yet ready. Maybe we may see a kind of pullback, so we have to watch it carefully. So, for instance, if the price move from here and just stop somewhere here, okay, and start coming down, we'll say, well, they couldn't achieve, okay, the previous, okay, targets. They are not really up for it, because if they really enjoy it, they should be asking for more. You understand? So to speak. So, but because if we stop here, we'll know that, okay, they don't like it very much. But you can see in this case, that will be a kind of weakness in the uptrend. You understand? A higher low is an invitation to buy. So if people responded to the invitation, but they couldn't enjoy as people enjoyed before, it means that the party is not, okay, moving up again, so to speak. All right? So they enjoy themselves from here to here. Now, if in the second invitation, people come, they couldn't enjoy themselves as much as they did before, we will say that, okay, the momentum for the party is going down. All right? Okay? It makes sense. But here you can see that carefully, these smart money, they enjoy themselves as they did before, exactly the same level. Look at that. All right? The same level. Okay? So with this information, you can make excellent decisions. Okay, so the price, you can see, pull back to this level. Okay, now the next thing that we know also, so you draw this line and you can make excellent decisions. The week of this candle, these are support level. That's people buy it. Buy went down to so there's a support in this zone here. Can you see? Because we're on the yearly chart now, there is a support here. Anytime you see the tail here, these are support zone. So you see where the price is stopping now. After it did below my blue trend line, it came back to a support zone. This is a support zone. This is a support zone. This is a resistance zone. When you see the wick like this, it's a resistance zone. Okay, all right. Okay, so it came back to a support zone. So trader took profit. Now it's going back again up. But talking about the Elliott wave, okay, patterns, we have an edge. We have an edge because we understand something that the price doing all the time. Price move in 5 waves. Okay, now the price pull back to the 50% of 61.8 zone. Now the price go back again, display a new high. The first thing that is coming to our mind is a flat correction. Now, we will expect either a running flat correction or an expanded flat correction. At this point in time, it looks to me because the C did not break below the end of the A corrective move, it looks to me this is a running flat correction. The running flat correction is a very bullish pattern, and it will happen, okay, after a strong move and a flat, okay, correction like this. You may say to me, John, this is not 5 waves. Okay, let's go to this session here. So you are right. It doesn't look like 5 waves. It went down, went up, went down, went up. Now it's turning here. It may be if an expanded flat correction, as I explained to you, which means the price may go up like this, and then come back down like this to take the end of the A corrective move. But I don't believe that. That's my heart speaking to me, not my head. Let's go to, so I'm going to draw a vertical line here. Okay, somewhere here, okay? And I will color it, okay, into red. Yeah, let's use red, okay? Yeah, pay attention to this line. I'm going to switch from the yearly chart to the monthly chart to look at the internal wave or the sub-wave of this move from here to here. That's how you can verify to know what is happening. Sometimes, if it's compact like this, so to speak, if we are zooming out of it like this, you may not see everything. But then you can switch to another time frame and things can become very clear. That's what I'm doing here, this session. Okay? So I'm going to the monthly chart now. And I'm going to look. Keep my eyes wide open. You see my red line that I draw on the yearly chart to analyze my C corrective move. You see now on this monthly chart, it doesn't look anymore like only 3 waves. What I'm going to do, without fooling myself like okay, I'm just going to go like a little chart learning Elliott wave and say, oh, daddy, he moved from here down to this level here, and then he moved up to this level here, just like a chart plane. And I'm going to say, and then he went down to this point, because that's what the children, they don't lie. They will tell you that. They say, yeah, he went there, he went down here. Yes, he went down to that level. And then he moved up all the way here. And then he moved down to this level here. I don't want to lie to myself, because if you lie to yourself, you may end up making a wrong decision. So I'm just drawing lines to where the prior went to. And I'll wait a moment because it's white now. I will color it so you can see it because of the background of my chart. By the way, this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTWSYS008 traders. The TSTWSYS008 trading system is not a robot, it's not a software, and does not trade for traders. It's a tool that traders will use to make excellent decisions. It's for active traders, not for passive traders. All right. So, okay, I'm going to call out all my lines down. I went over my time. Apologies to traders. Let's see what I will do. All right? You see now? Now you see it. Now you don't see it. Okay? So you know that song? Okay. But because I'm getting hungry now, it's lunchtime in London, so I'm like this a bit. So here we are. So this, let's go back again to the yearly chart. So we see that it went down like this on the yearly chart and went up like this. We see only 3 moves. So I'm trying to look. It's like using microscope to look inside. Okay, you understand? Sometimes I say to trader, looking inside the price. That's what we are doing now. We are looking inside the price to see the internal wave, what the price has done. According to my heart, the price display A, B, C. All right, this is X here. A, B, C, X, and then went down 1, 2, 3, 4, 5. Can you see that? Am I lying? You see, it went down 3 times here. This is a corrective move. 1, 2, 3, and then a move up. Okay, and then it went down 1, 2, 3, 4, 5. Can you see now? This is a complex C corrective wave, which is a kind of a double zigzag. Okay, you see, A, B, C. All right. So in a double zigzag, I mean, here we have a zigzag 1, 2, 3, X. Okay, instead of having 1, 2, 3, we have 1, 2, 3, 4, 5. All right. So the price went on like this. This is the corrective phase. A, B, C, X. 1, 2, 3, 4, 5. In my view, this move on the yearly chart is coming to the end. Because why? How do we know? Look carefully. Look carefully, ladies and gentlemen. Look. Whenever we count 5, what do? We pause. It does not matter what it is, whether it's a corrective 5 or whether it's an impulsive 5. In the Elliott wave language, whenever we count 5, we pause. All right? Whenever we count 3, we pay attention. Whenever we count 5, we pause. So we see here 1, 2, 3, we pay attention. It move up. Now we see 1, 2, 3, 4, 5, we pause. This is my guidance. You may completely disagree with my guidance, but that's how I trade the Elliott wave. Whenever I count, it doesn't matter. Like a child, I can just go like this. 1, 2, 3, 4, 5. I don't lie to myself. And then I say, all right, okay. Like here, I can say, okay, I see it went up like this, okay. And it came down like this, okay. And then it went up like this, okay. And then it came down like this, okay. And then it went up to this level, somewhere here, okay. Accept that, okay. So 1, 2, 3, 4, 5. I will pause. Or what do I mean by pause? I will just highlight it. I count 5 waves here. The same thing I did here. 1, 2, 3, 4, 5. We highlight it. Okay? When we count 1, 2, 3, even here you see 1, 2, 3, pay attention. Pay attention. Draw lines. See what's happening. Pay attention when you count 3. Pay attention carefully. It may not end it yet. Why? Because very often, trader will buy and hold at the end of the 3rd wave in a downtrend. And they forget that it's only a 4th wave they are buying. And the 5th wave will continue and take them out. So that's why I say to trader, whenever you count 3, pay attention carefully. All right? So here, for instance, you see 1, 2, 3. Pay attention carefully. Don't sell and hold when you count 3. Don't sell and hold when you count 3. But very often, this is what's happening. Traders are selling and holding after they count 3. But when we see 1, 2, 3, we pay attention. When we count 1, 2, 3, 4, 5, okay, we pause. You can quote me on that, okay? You can say, George Trio said that, okay? I said it. Okay, all right. So we see now, so though on the yearly chart, it looks like 3 waves, it's not exactly what is taking place there now. All right? You see now? So I'm happy with my pattern that this is a running flat correction that remains to be seen. If the fundamentals are not strong, if the fundamentals are not holding, you see that I'm getting hungry now. Okay. The S&P 500 is now above 1500, talking about the trending triangle. If you fail to hold it around the 1500 zone and start getting bearish, all this blah blah blah, you'll see that the price will follow the market. It's about a trading triangle. And also, if this staple stock, hey, their performance is not getting good, and they come up with some earning warnings, all this blah 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 will not happen. So, which means instead of a running flat correction, we may end up having an expanded flat correction. I hope you have enjoyed this video. Oh, I'm too hungry. That you will put into use, ladies and gentlemen, okay, to make excellent trading decision. Until the next time, enjoy yourself and be very happy. Speak to you soon. We are the TSTW SYS 008 traders.